Welcome to Entrepreneurs International Network, where entrepreneurs learn, network, and grow. I'm Roger Killen, the organizer. This evening, Kim Nagle is training us on how to apply the DAM plan to cash flow with confidence. Kim, I have got 3 questions for you. Number 1, what motivates you?
Oh, that's an interesting question. I actually wrote about motivation in the DAM plan, the book, the DAM plan. And one of the things I know about motivation is it's internal. It comes from within us. Nothing from the outside can motivate us, only from our own desires. And what motivates me is simply knowing, this might sound crazy, but knowing people are watching, especially my 6 granddaughters and my kids who are also entrepreneurs. So that motivates me a great deal. Once I say I'm going to do something, I can't not do it.
Good for you. Number 2, if you could tell your younger entrepreneurial self one thing, what would that one thing be?
Well, my much younger entrepreneurial self was 14 when she started her first business, and simply to buy a really good pair of Lee Buttonfly jeans, if anybody remembers those. And I would tell her to simply stick to it, stick to something until it works, and then be able to measure it along the way. And we talk about that because we give up. Sometimes we give up short of the gold mine. And I have done that in my entrepreneurial journey, but no more.
Okay, great lesson for one of your 6 granddaughters. Actually, for all of your 6 granddaughters. All right, now my third and last question is this. What is the best decision that you have ever made, either business or personal?
The best decision I have ever made is to do what I said I would do. And I don't take that comment lightly. All too often, we do what people think we should do. And we live our lives in somebody else's purview, the way they think we should live it. And the best advice or the best thing I ever did was decide to live my own life.
Okay, lovely. Now, participants, please turn on your video. From Kim's point of view, it gets pretty lonely talking at a black rectangle with a name on it. So if you could, if you wouldn't mind coming online so that there's some level of interactivity between you and Kim, that would be much appreciated. During Kim's talk, I ask you to stay muted. And if you have questions, type them into the chat. Every 10 minutes or so, I'll pose the accumulated questions to Kim. So rest assured you're going to get your questions answered. It's just we'll do so in an efficient way. Now you're going to be sent a link to the recording of Kim's workshop in a few hours. But nevertheless, I encourage you to take notes because the very act of taking notes is going to increase what you absorb, and often by as much as 30%. Kim, are you ready to knock our socks off?
I don't know. Does everybody have socks on?
I should say,
these days we can show up without our socks on. So but if you got them on, I'm ready to roll here.
Take it away.
So, thank you very much, Roger. It is so fabulous to see, even if you are a square black box tonight, it's fabulous to see all of you on here and the smiling faces. I truly do appreciate it. So thank you, Roger, for inviting me to be part of this EIN group. And yes, Richard, every time I say it, I think employer identification number. So I am a numbers person. I do business by the numbers, but not just for the tax purposes. We got tax season here in the US coming up, and everybody's worried about getting their taxes. And this is the time of year where everybody figures out whether they made any money, by the way. I don't know, I'm hoping it's not you, but 84% of all people out there do not have a financial plan. And literally a lot of them are finding out whether they made money or not about this time of year. So I'm hoping you're not one of them. And tonight I'm going to share some thoughts and ideas around the DAM plan that will maybe inspire you. I'm not going to teach you deep, dark accounting secrets, but I'm going to hopefully inspire you to really work on your business. So let me start out though. I need to start out with a little story because I mentioned my 6 granddaughters. I mentioned, maybe gave you a little glimpse into my life, about life changes. And I made some significant life changes just not all that long ago, leaving a very long-term relationship that was abusive. And it took a lot of guts. It took a lot of guts, but the biggest amount of courage that I needed was the courage to know me, the courage to really live my life and to know myself and to believe in myself. And believe it or not, what we're talking about tonight, cash flow with confidence, has as much to do with believing about yourself as it does about the numbers. Matter of fact, I'm going to say it has more to do about believing in you, believing in what you're worth, than even the numbers. So let me tell you this little story. So after I had been on my own for a while, and it was about this time of year, it was dark here in Minnesota, like it's dark many other places in the country, except for that guy by the beach. Who's the guy by the beach anyway? Anyway, it was dark and it was cold, and hey, I was just looking for some fun. So I got on Match.com. Talk about a whole brand new world for somebody who had not been in the dating world for nearly 30 years. I got on there and met some fabulous people. I'll have to say that some fabulous people came across my path. But I was very concerned as I kind of entered this new world, what my granddaughters would think. What would they think? They had a certain image about who I was, as did a whole lot of other people. What would they think? So I sat my oldest granddaughter down and I said, "Say, Naya, what do you think about grandma dating?" Oh, she looked at me very seriously and very sincerely, and she says, "Oh, grandma, I'm so happy for you. I'm so glad that you're dating. It's okay. Then it's okay if grandma has a boyfriend." "Oh, sure, it's okay if you have a boyfriend." And I looked at her and I said, "So what about boyfriends?" "Oh, grandma." It wasn't but a couple of weeks later, and we're sitting on the couch together, and my phone buzzes, and a gentleman friend texts me, and she goes, "Grandma, your boyfriend's texting you." And I said, "Which one?" And she goes, "Oh, grandma, I just don't know you anymore." It was kind of at that moment in the face of a child, that I really could see the reflection of me. I could see the reflection of somebody who had taken a journey in life and had gotten to know herself, and was finally, for the first time, valuing herself. Even though Naya didn't think she knew me anymore, she was kidding. I knew myself better than anyone at that point. And in all honesty, the very essence of knowing myself, knowing my value, when people started coming on, we were talking about just being able to value yourself and charging appropriately. That is the key to cash flowing with confidence. So let's get this show, the whole lesson beyond having fun and our goal in life. If you have children or grandchildren, your goal in life is to torture them, to have a lot of fun with them, to from time to time embarrass them. So at least that's what I believe. So what is this damn plan anyway? Well, the damn plan is a book. It's a book that I wrote, published back in April of 2021. So it's fairly fresh out there. It is an Amazon bestseller according to Amazon rules. But the damn plan is more than just a book. The damn plan is DAM is an acronym, and DAM stands for First Determined Decisions. Now, these are not just any old decisions. Determined decisions are decisions that you make based on the facts and backed up with your willingness to take action. Now, if there's anything you should write down tonight, that's exactly what you should write down. I will make determined decisions based in fact, and I will be willing to take action, because there isn't a decision in the world that's worth a grain of salt unless you act on it. So A is act consistently. Acting consistently is more important than what you do in a mad scramble. Doing what you do every day is more important than what you do every once in a while. So it's consistency, it's discipline. And I know I've coached thousands of entrepreneurs, and I know that all of us are in this arena because we want a certain level of freedom to say when we work, how we work, and what we do. But you can raise your hand if I can see you. I mean, if you signed up for entrepreneurship for that, that's exactly what most people sign up for, is the freedom. But that doesn't mean you don't discipline yourself. Freedom comes with discipline. Freedom comes with discipline. So everything you need to do needs to be done consistently. And then M is for mind your business. This is all about measuring your results. So you've made your determined decision to change your market, change your branding. You acted consistently. You consistently used your branding. And now you need to measure the results. That's where minding your business comes around. And it comes around every day of the week, not every once in a while. You need to know where you're at financially, where your numbers are every day of the week. And last is no excuses. No excuses, frankly, is what kind of got me out of my rut. I realized that I had made enough excuses to sink the Titanic. We've done the run of COVID. COVID hurt a lot of businesses, but we've been at it for 2 years, and we need to move forward with no excuses. That's the extreme of no excuses. There's always another way. There's more than one right answer. You need to be willing to move on it. If you're making excuses, you're not willing to do what it takes to be successful. So that's DAM. That's DAM in a nutshell. And it is not just a way of planning, because it is a way of planning. It is an attitude. It's an attitude toward everything you do. Well, and then it's just kind of a fun word to say. You know, when you put a pair of jeans on and you find 20 bucks in the pocket, what do? You go, damn. And then when you lose $100 or so, or maybe even 20, you go, damn. So it's a fun word to say. So I encourage liberal use of it. But where we're at right now is I would like to have you answer a question for me. Very simply, why are you in business? Well, I clicked too far. Why are you in business? I mentioned a lot of people are in business because they're looking for freedom. Very few people, believe it or not, believe they are in business to make money. They will not put it first, even the best of capitalists, because somehow in our society, it has become kind of, it's icky. We don't want to talk about making money. But here's a simple quote that comes out of my book. When you are broke, you can only think about money. When you have money, you can think about your mission. Now, if you're in business to serve people, which I am, and I know that Roger mentioned service, we're all in business, I hope, for a mission. We need to be leaving this planet better than we found it. But you cannot focus on your mission when you are broke. Think on that a while. But here, I'll let you take this one step further. Just, if you pulled up your banking app right now, I don't know how many people use a banking app on their phone, but I live and die by my cell phone. If you pulled up that banking app right now and it had a negative balance in that bank account, where would your head go? Your head would not be focused on your mission. Your head would be focused on money. So when you have money, you can focus on your mission. Does that make sense? If you have comments, Definitely. Please share your comments. I'm looking over here and somebody said they just freak out and, never have a negative balance by principle. And I get that. I agree. Negative balances aren't good at all, ever. Don't go there. But I think we'd all freak out. I think freak out is a great way of saying it. So where I want you to go right now, thinking about your mission, thinking about how you're going to accomplish it. I want you to now turn your thoughts inward toward yourself, because this is where cash flowing with confidence, as I said, starts. When we feed this, when we feed ourselves, when we take care of ourselves, then we can work on our mission. So let's discover your truth. What do you want? What do you want out of your business? This is a great time. I'm hoping, as Roger said, you got your notepad out there and you're grabbing some thoughts out of this. But right now, what I want you to write down is what you want. What do you really want from your business? What is your business? What can it provide you? And that can be in terms of money. It can be in terms of time. It can be in terms of things, relationships. What do you want? And then I want you to ask yourself or figure out, because I want to have you put it as a number. What do you need? What do you need? Now, I've always been in the position where if my business did not make money, the bills weren't getting paid. My personal bills weren't getting paid. I didn't have a plan B. I didn't have the opportunity for somebody else to pick up the other side of the bills. So getting what I need out of my business has been critical. So what do you need? Put down a number. Does everybody have a number? I like somebody put abundance, $1 million a year. How do you know you need $1 million a year? That sounds, I'm hoping that's a want. It's an expensive lifestyle. But what do you need? What's the bottom line? So regardless of where you are financially, whether you are, you have an abundance of income in your bank or money in your bank account or not, there's a certain amount of money that you need every month. So what's your bare minimum? What's your absolute bare minimum? Does everybody kind of have a number?
The numbers in the chat go from 15K to 3K.
Okay. All right. Good job. Good job. So this is your bare minimum. So here's the thing to think about. If your business cannot pay you that, if your business isn't such that it can meet your bare minimum, you need to question your business model, or you need to question what you're doing. Roger and I talked, or I think it was a number of people were talking here again in the beginning about the idea that an entrepreneur is this die-hard, just, oh my gosh, I got to make the donuts and I'm going to just kill myself and someday I'll be able to sell this business and I'll make some money. If you bought into that as a business model, I just ask you to buy out, get yourself out of that thought. Your business needs to take care of you as much as you need to take care of your business. Very plain and simple. I'm not going to even sugarcoat that. So the next question as we go is, what are you worth? Now, this is one of the harder numbers that you will ever put into a financial projection, is what are you worth? But yet, it is the number one reason why people aren't paying themselves anything out of their business. And oftentimes it's a simple tweak. It's a simple tweak on value, a simple understanding of what the value of their service or their product truly is to their customer. And then finding their ideal customer that will pay that worth. Very often I have people that'll come to a coaching session and say, but I live in, where I live, people just can't afford that. And my question is, two things. You can't sell a product for less than you can sell it for, or a service for less than you can sell it for. So you're either selling the wrong product to the right people, or you need to find the right people. And oftentimes it's a matter of finding the right people. And in our virtual environment, it is easier now than it ever was to find the right people for our products or services. So what are you worth? This might come with all sorts of thoughts and ideas that are creeping into your head. If you've ever been told, who do you think you are? Who do you think you are charging that much? Maybe not in those words, but you might have seen it in their faces. Or maybe you were told that it would be greedy to charge that much. Or maybe you feel like you don't have the credentials to charge what you're worth. This is an opportunity for you to sit down and truly examine where these thoughts are coming from and why you are valuing yourself as you are. And that includes giving away time. So oftentimes we'll get our value right, but then we'll end up giving away 8, 15, 20 hours a week for absolutely nada. So think about what you're worth and hold it tight. It was one of the harder things that I had to learn on my personal journey to getting my business to where it is today. And I can tell you without blinking an eyelash that just this change in value statement for me and my business increased my revenue 500% in 18 months. And my clients did not bat an eyelash. And you know what I said? Well, damn. Because I had been undercharging for a lot of years because I came to the table with just those thoughts. I came to the table with the idea that they couldn't afford more. I came to the table with the idea that I wasn't worth that. I came to the table with, but somebody else, living somewhere else is worth more. But it's not the truth. It's not the truth at all. So what are you worth? Bottom line, I've heard some people talk about abundance, and I truly believe in abundance. And if you study abundance and know how it comes, you attract abundance with an abundant mindset. You attract abundance with an abundant mindset. You do not attract abundance with a mindset like this. You just don't. People want to hang out with you. They want to do business with you if you have an abundant mindset, if you believe in what you're worth. All right, before I dig into one of my favorite formulas of all time, break-even analysis, otherwise it's called the Napkin Test. People use it in many different ways, but I want to cap that idea of your worth because this is how insidious it can be. So after I had established my worth, my value pay, my value price, somebody called me and offered an opportunity. It was an engagement that they wanted me to take, but they gave me the story that they didn't have much for a budget, and what would I charge? So I called my business coach at the time and I said, so Mark, I said, what should I charge them? And he goes, what's your rate? And that's all he said. That's what you charge, your rate. Now from there, you can negotiate, but you never negotiate away the value. And that would be a whole nother session to do, but you never negotiate away your value. Your value is your value is your value. And that's what your rate is. That's what you charge.
Kim, are you open for a question?
I am. It would be great to get a sip of water. Thank you.
This one is from Paige, who asks a question that I don't fully understand, but let me just read it as it is. How can we find the matching number /amount /value ?
Good question. I mean, the value of what you should be charging. Well, it's kind of funny that I wrote a whole section on it in the damn plan, because that is a struggle that people have, is figuring out what their value is. What price should I charge, especially in the service business, whether you're a professional, coach, a speaker, a bookkeeper, whatever it is. So one of the first places you can start is with looking at the competitive industry, of course, when you are figuring out your value price. But tonight we're talking about your value pay, which is what you're going to get paid. So the way I approach that, because if we can't ever pay ourselves what we're worth, we should probably take a job that'll pay us what we're worth. Unless there's something else in our business that overrides that. It's a cold, hard fact. But so your value pay, where you start, if you were ever employed in your field, what did you make then? You can go out to places like Glassdoor, Indeed, other places, and look up the job you have inside of your business. So when you look at the job you have inside of your business, it's not just, well, I do bookkeeping, so I'm the bookkeeper. There's a couple of bookkeeping businesses here, and anybody that is running their business knows they're not just doing bookkeeping. There's another 50, 60% that's running the business. So you're the CEO, you're the chief cook and bottle washer. What are all the things that you need to be doing in that business? And what would you get paid for doing that someplace else? And you can look those kind of salary figures up. And a lot of people are very surprised at what people are getting paid in the job market for what they're doing in their business. And that's one way you can set your value pay. From the very minimum, I ask you to put what you need. If you've never done a personal budget, now's a really good time. How you manage your personal money will definitely relate to how you manage your business money. So if you're not doing budgets on your personal level, you won't be doing budgets on your business level. Maybe not, maybe. So I think it's really important to do a budget and find out what you really need to live on. Because there may be times in your business, and we'll explore that, where you need to do what I call eat beans and weenies. You need to back off on what you're spending in your personal life in order to build something in your business. I took on a full-time partner, she happens to be my daughter as well, 3 years ago. It was a risk that I took. I had to personally eat a few beans and weenies to bring her on until we got the income up to where she was getting paid. I could pay her full-time and get back to where I was paying myself full-time. So there's times when you've got to be like that, but figuring out your value pay, I hope I answered it. I answered 2 questions, I guess, one that wasn't even asked, but figuring out your value pay. Look on what other people in the job market are getting paid for what you do. Okay?
No further questions, Kim.
All right. So let's go on with break even. I don't know, many of you may have seen this, may have used it. It's a simple formula. Basically, the top line, this is division. The top line is operating expenses. These are the expenses that you need to pay regardless of the level of sales you are doing in your business. So if you rent an office, you get to pay the office rent no matter if you made $1 in sales that month or $1 million in sales. You get to pay the rent, the utilities, your marketing, and your employees, insurance, all of those things are operating expenses, as opposed to what it costs you to produce your product or service. Those are called variable expenses, and they make up, that's how we calculate gross profit margin, which I'll get to in a minute. So the top line is operating expenses, and then we're going to add in that value pay. So this is where you need to know that number. And then your gross profit margin. So regardless of the type of business you're in, there are expenses that are directly related to you producing your product or service. Even as a business coach, I have, if I send coaching clients a copy of my book, that's an expense to me. And I need to figure that in my cost of what I charge them, because it's not free. So that makes up my gross profit margin. It is, if I sell something for $1 and it costs me 50 cents to make it, my gross profit margin is 50 cents. All right, I'm going to show you how that works.
Kim, confusion around this term value pay. Please define.
Oh, value pay. Your value pay is what you're going to pay yourself. This is When you get out of bed in the morning to go to work, your value pay is what you're going to pay yourself. So you might not be able to pull it out of your business right now, but this is the damn plan. This is the damn plan so that you can pay yourself what you're worth, not take leftovers. So if your business is set up right now, where at the end of the month, you pay your bills and you take what's left, you're not reaching your value pay, obviously. Your value pay is that number that if you were working someplace else, this is what you'd get paid. Or this is what makes you happy. This is what gets you out of bed in the morning. Does that make sense?
Yes, no further questions.
Okay. All right. Sorry for the confusion. All right. So in our scenario here, we have $5,000 in operating expenses. This particular owner would like to bring home $5,000 a month. This is money that they're going to write themselves a check, pay themselves, and put it in their personal bank account. Okay, there's a transaction. The company paid the owner for doing the work. So $5,000 to the owner, $5,000 in operating expenses had to go out that month. And they have a 50% gross profit margin. That's that for every dollar they sell, it costs them 50 cents to make it. So they have 50 cents left over, essentially. This is also a percentage in this case. If you do the calculation, your business must generate $20,000 in minimum revenue to reach that goal. So if right now, if you dropped your numbers onto your piece of paper, if you have your piece of paper handy, it's called a napkin test because people scribble it out all the time. Put down what you believe your operating expenses are. If you don't know them, go figure them out at some time soon. And then what do you want to bring home every month? What does it cost you to produce your product and service? And you should be able to calculate what you need to make every month. Now, this is where cash flow comes in. Cash will not flow unless you are meeting that minimum revenue number. So that revenue number becomes a motivator. It becomes a goal. The interesting part for me, when I started using this plan, and I've been using it for a number of years, when I put myself in the budget, when I put my value pay as a line item that the business had to pay every month, you talk about a motivator. If you've ever made payroll, if you're making payroll right now and if things get tight, you know how stressful it is not to be able to make payroll. Do that to yourself as the owner too. Put some stress on yourself for not making your own damn payroll. For real, it will be a motivator. You will get out there and make those sales just by that motivation. Make your payroll every month. The way I have it set up along with my business partner daughter is we pay ourselves on the 1st and the 15th, just like anyone else. And I can, to give a testimony of my own, since using this particular way of thinking about my business and me as an employee that gets paid a payroll, I've made payroll consistently for the last 5 years. So it works. It works because it changes your mindset about what you're doing. But more than that, the $20,000, what is that going to tell you? It's going to ask you some questions, first of all. It's going to maybe create some truth, some moment of truth. Can my business, the way I'm operating it right now, meet that revenue goal? Is it possible? And then how is it possible? So from here, you take that 20,000 and start dissecting that. In the end, if you find that your business does not have the capacity to make the money it needs to make, to pay its bills and to pay you, then you need to make some adjustments. Because when a business only has the capacity to make $10, it doesn't matter how many more hours you put in. It doesn't matter how hard you work. It will only make $10. It's a hardcore fact. I love business, and I love being with people that own businesses, because we are eternal optimists, or we wouldn't be in business. We believe that it's possible. So this calls us to action. It doesn't say, oh my gosh, I can't do this. It calls us to action. I'm hoping it'll call you to action. So let's get on to this cash flow, because that $20,000 I was talking about, that's cash in the bank. That's not someday money. That's not hope for money. That's not even a contract. That's a sale that generated cash that went in your bank account, because cash is, well, they say cash is king. I'll give it to both. Cash is king and it's queen.
Kim,
Yes.
BNI is asking, can you go back to the formula? I do not understand the numbers,
I can.
says BNI.
All right.
Maybe you'd like to unmute and explain what you're not understanding.
Yeah, it's Sherry here. Kim, you talk about the operating expenses being 5,000. That makes sense. And the value pay, you feel that you're worth the 5,000. So in my head, that makes 10,000. And that then in my head gets divided by what you expect your gross profit margin to be. So
Right.
obviously I'm missing something, because in my head, it doesn't come out to 20,000.
If you divide, okay, so if you take 10,000, I would be totally embarrassed if my numbers were wrong, but they shouldn't be. If
I'm
you
sure
take
they're not. I just
10,000
don't
and divide
understand
it by 0.5, it's 20,000. And the reason why, remember when I said that if you are producing a product that costs $1, you're charging your client $1.
Yeah.
And $1 is just an easy number to think about. And every time you produce that product, it costs you 50 cents. So it might cost you 50 cents. Let's just say you know, the cost of the book.
Yeah.
I sell the book for, you know, the price on the book is $20. It costs me, can't remember what it cost me. My publisher knows. You know, if it costs me $10, then I actually only get $10 in cash. So that's where that 50% in this scenario comes from. But your number could be different. It could be that it costs you 20 cents on the dollar to sell your product, or it costs you 80 cents. If you're in a restaurant, your cost of goods sold could be as high as 75% or 85% with food and direct labor. If you're selling a retail product, your cost of goods might be 65%. So every business is going to be different. And that's where tracking the numbers, our bookkeeper people here that we've got online know how important it is tracking the numbers. If you're not keeping track of what it's costing you, you can't figure this out. But you can, I don't object to a good, strong guess. Okay. A good, strong guesstimate is better than not even trying in numbers. I don't know if we've got any Trek fans here, but one of the best lines in the world is if Spock guessed, it's almost like a for sure thing. So
Another
that helped a lot.
okay.
question from Leslie Flowers.
Yes.
We can say what we are worth, yet all are not masters to charge full worth. Does Kim recommend a side job?
Well, it really depends upon the business. So I have a couple schools of thought. If you can do it, if it works, great. If your side job is taking away from the potential to really, really build your business, then, and if you can, I mean, we all have to eat. We all have to pay our bills. That's just all there is to it. But sometimes we have plan Bs over here. We have this thing. If this doesn't work, I'll just go and do plan B. And sometimes to build the business of your dreams, sometimes to build the business that really does pay you your full value all the time, every day, you have to burn your plan B. So I talk to people about stepping into it. So as you are building your business, you step into it. So maybe you keep that day job for a while. I did in the beginning. I kept actually, I worked a full-time job, ran a full-time business, and took care of 3 kids, but just call me crazy. I don't recommend that, not at all, but to step into it is possible. Now, when you said that sometimes we are not worth that is, we're worth what we're worth. It's a matter of who we're worth that number to. So finding your ideal clients, finding the people who will pay you your true value and doing the work with and working with them. Not settling for less. It's a very deep question, and I really respect that question, but I don't necessarily, if you really want to be a business owner, be a business owner. At some point, you need to have a strategy to burn your plan B.
Joan W's question is, so the variable is the minimum revenue, and that's how you find out what your gross margin is, question mark, or?
No, you find out what your gross profit margin is. Your gross profit margin, here again, let me use the book. I'm flashing my book left and right. The price is $20. It costs approximately $10 to get into my customer's hands. So the gross profit margin on this book is $10. $20 minus 10 is 10. If this pen was $1 and it cost 50 cents to produce, the gross profit is 50 cents. You can turn that into a percentage just by dividing the cost by the price.
So the or from Joan W, you input the margin and calculate the minimum revenue.
Yep. So it's $10,000 divided by 0.5 in this case. If you want to try it differently, divide that 10,000 by 0.2 at 20% gross profit margin.
Okay, no further questions.
All right. Great questions, by the way. Thank you very much. I'm hoping it clarifies for others too. So cash is queen or king, however you want to look at it. And so let's get to the meat of it. This is cash flow. This is where that $20,000 might come in. If you find that your business cannot pay you and those operating expenses because it can't make $20, you've got some choices. You can pay yourself less. That's not my first choice. Or you can look at your operating expenses, or you can look at the price you charge. There's many things you can look at, but let's start with what is cash flow. Cash flow, very simply, and think of cold hard cash. This is cash you can actually deposit in the bank. Is cash in from sales. And it might be cash in if you took a loan or you've got some investors, that's cash in. And it's cash out to cover your operating expenses and your value pay and the cost of producing your product or service. And more importantly, it's the timing of that cash. So it's the timing, when the money comes in and when it goes out. In our personal budget, I don't know if anybody's ever said that there's more month left at the end of the money. There's too much month left at the end of the money sometimes. This is a scenario in business very frequently. So to get our timing right can really help us begin to pay ourselves our value pay. So let's look a little bit at how that works. And I want to remind you about that mission and money thing, but I'm going to carry forward. So I'd like you to meet Mary. I'm going to tell you how to do cash flow using a few scenarios. And Mary she's a fabulous business owner. She has been an interior designer for her whole life. And everybody said, Mary, you should really start your own shop. So Mary did. And she put together this cute little storefront and she hired a part-time gal and she got started in business. She didn't have a damn plan. All right. She hadn't made her decisions by the numbers. She hadn't looked at what she would need to make in terms of income. She just walked out of her business and said literally that her value, what she would charge an hour, was $95. And that's about as much thought as she put into it. And I can tell you that that's about as much thought as a lot of people put into what they're going to charge. So if you take a really good look at Mary's cash flow, you will see that if she pays herself her value pay, there's a big red line at the end of the month. In other words, at the end of her cash balance. In other words, she's not going to pay herself at the end of the month. So this is how cash works. I kind of got ahead of myself. I apologize for that. So cash flow starts with what you have in the bank today. And because Mary was a new business, she started with zero. Now we start with zero sometimes also to see what kind of money we actually need in the bank. She got $7,600 because she worked 80 and she charged 95. So she had $7,600 in cash. She paid for some materials and some samples, about 10% of what she sells. And then she paid for her marketing, she paid her payroll. And whether these numbers look real or seem really fictitious, these are just numbers for a scenario. But you can see by the big red line that Mary, she's in trouble. She's in the hole by the end of the 5th month to the tune of nearly $14,500. Now let's just take a simple tweak. Now this is the interior design market. And if you do a little research on the interior design market, the fees that people charge for doing interior decorating range from $50 to $500. It spans the gamut, depending upon who that ideal customer is again, and the market you're in and the type of design work you're doing. But Mary just said, well, you know, they used to pay me about $95, so I think I'll charge $95. That's kind of what her thought was. But if Mary just tweaks her price, which in this market she could do by $30, if she starts booking out herself at $125 an hour, suddenly she can cash flow. That's how simple your cash flow changes can be, is a simple tweak in price. Now, a lot of people say, well, you can't just, I mean, this is on paper. You can do that all day long on paper. Yep, you can do it all day long on paper. But the day I told my client that I would be charging them twice as much next year was the day the rubber hit the road, was the day I had to say that. And I can say I was scared. I was scared they would say no. I would scared that they would say, well, we'll have to find someone else. They didn't. And that was good. But I was prepared as well for the no. And I was willing to accept it because at the price I was charging, I was going broke. I was Mary with the negative cash flow. So it's not a matter of if you can charge it. Sometimes it's a must charge it. Or you need to find more than one day job, or you need to find a new market or something. So don't, if you're stepping toward this, it's scary. It's scary because people may say no. But I want you to also think, well, what if they do? I've actually had clients that have been grateful. They said no to my price. So don't worry. Don't be so scared that you don't try it, because you won't know if it works until you try.
2 questions, Kim.
Yes, please, before I get to Vanessa.
One from Julie. Are operating expenses usually fixed?
All the time.
Second.
Operating expenses, you do have a lot of decisions, and we're going to talk a little bit about that with Vanessa. Your operating expenses get paid regardless of whether you're actually making sales or not. If they vary with the level of sales, if you only pay that expense when you make a sale, that's what's that variable expense we talked about, that cost of the book.
Question from Hemant.
Yep.
Isn't this an obvious strategy or option to stimulate pricing?
Yes. It is very obvious, but and I'm glad you think it's obvious, but it is a strategy that is, people just don't do it. They just don't do it. And it is, even if you changed your price, if you thought about your your business today. I don't know what type of business everyone has, but let's just say you work hourly and you book out, 1,000 hours a year, and you charged $5 more an hour. You started charging $5 more an hour. That's $5,000. If you only charged $1 more, that's 1,000. But we get stuck in a price, or we don't examine our price, or we figure that, oh dear, they're willing to pay us that. We have lots of business. We're real busy. We're good. Being busy is great, right? Well, being busy can make you broke too. So having the guts enough to charge your value is how you pay yourself your value pay. And you just must. So let me introduce you to Vanessa, because Vanessa tells a little bit of this story of those operating expenses in terms of employees. So Vanessa, she's like Mary. She's got receivables to pay, and she hasn't paid herself in a month of Sundays. She was one of those independents. She's a social media marketing specialist. They're blossoming all over the place, and they do great. Some of them are website designers, and it's a huge growing industry of people that have entered this market, and it's a great market. But here again, a lot of them worked for a company, a lot have worked for another company, and then they thought they'd start business on their own. There's a fabulous book out there that was written way back in the early 80s called The E-Myth. And in the E-Myth, it talks about the fact that the number one reason why businesses fail is that the vast majority of businesses are started by people who have a skill, who know something, and they know how to do it, and they're very good at it, but they don't know how to run the business that delivers that skill. And that's the number one reason for business failure. So that was Vanessa, short and long of it. So Vanessa got very busy. She came right out of the gate with customers, and she had saved some money, so she had a little cash in the bank, and she's working really hard. And oh my gosh, she's so busy. I've got to hire some people to help me because I'm so busy. So without even looking at what it was going to cost, what the increase in revenue might have to be, she just hires people because she is so busy. She's not looking at her numbers. She's a social media marketing specialist, and she's really good at it, but she doesn't have any kind of knowledge in actually managing the business or using her numbers. So she needs to make at least $3,500 a month. She's a single gal. She needs to bring that money, and she has no plan Bs. And you can see that once she hired people, she lands up not being able to pay herself. And if you stretch this out without some significant changes, it takes her a while to even get back up to being able to pay herself that $3,500. So let's just look at a simple tweak that she can make. And one of the other pieces, and I use these two scenarios because they're the most common and they require sometimes the most courage. And that is to ask for a deposit. When you are doing work that you're going to be working on for a while, you're a contractor, you are delivering a service that it's going to take you 2-3 months. I write business plans for large organizations, and some of them will take me up to 6 months. I can't wait for 6 months to get paid, and I don't charge by the hour for them. So I charge progress payments and I charge upfront. So there's a certain amount of money that needs to come in up front. And that's what Vanessa needed to do. Her simple solution was to say, I need 50% upfront. So if you move the timing of the cash to upfront, now she can pay herself and she can pay her employees. She hasn't increased her prices. She's just moved the timing of the money. And that's where the power of cash flow planning comes in, knowing when you need the money, knowing how you can get it when you need it, and really working it. So these are very, very simple scenarios that kind of show the power of cash flow and show the importance of knowing your numbers and of having a plan, if you will, a damn plan, not just winging it. Winging it works for birds. And that's about it. So you need to have a plan, a structure, a plan of action, and know your numbers to see if what you're doing is actually working. So let me give you a few cash flow, what I call power tips. Number one, have a cash reserve. As we went through COVID, cash reserves really showed up big time. Those businesses that weren't living hand to mouth were able to weather the storm until they could reorganize or make some decisions. It was an unprecedented challenge for many businesses, but the one single thing that saved a lot of them was having a cash reserve. The other one is manage your accounts receivable. Don't delay invoicing people. Get your invoices out there and become that person that collects on their invoices. Lagging payments, you just don't need to happen. There are other ways of helping your customers pay you if they're struggling, including offering the opportunity to pay via a credit card. It does cost a percentage, but if it gets that cash in the bank, it might be worth it. Do that decision by the numbers, by the way. And then have a weekly or monthly cash flow meeting with your team. My business partner, my daughter, I mentioned her a couple of times, we have what we call Financial Fridays. We get up and get on screen. She's about 150 miles from me, and we do yoga for 30 minutes, and then we do numbers for about an hour and a half. And we look through our numbers, we look through where we're going and where we need to be. And if we're not meeting our goals financially, we make determined decisions accordingly. And then we act accordingly. But by having that weekly accountability with each other has been priceless. Now, I also do that with my coaching clients. I have that same accountability where I don't do yoga with all of them, but I do have that accountability with the financial meetings. And then get paid your value. Get paid your value. Plan your business so that this becomes a motivator. I'm glad that Roger asked me in the beginning what my motivator was. Yes, it is getting paid too, but my motivator is my mission. And in order to follow my mission, I need to get paid my value. I can't be broke, or I can't live my mission. And then be bankable. I love what one of the comments said, just by principle, never a negative balance. Take good care of your credit. Take very, very good care of your credit, and be bankable. Because in business, when that opportunity comes up, when you have the opportunity to expand, or you have the opportunity to invest, or you just need cash flow injection, being bankable is going to be what saves your day. All right. So having that bank relationship. I know that we're all mobile now. I haven't been inside of a bank, and I can't even remember when the last time was I was inside of a bank, but I have a banking relationship nonetheless with my business banker. And I encourage you to have the same. And that's just, sometimes it's just even, he follows me on social media. So,
are you ready?
Anyway,
Questions?
Lots of questions, please. I love the question part.
From Forrest Jones, can you talk about how to assess value pay and hours worked in online business? Do I pay myself by calculating dollars per hour while learning to discipline myself in the number of hours I'm working per week and delegating?
Oh, that's a big, beefy question. Your value pay. So as I mentioned, and I know this is confusing. So there's value price, your value price. This is what I'm charging my clients. This is I'm $100 an hour, I'm $50 an hour, I'm $25 an hour, whatever your hourly rate is, that's your value price, or the per hour value that you need to get in your business. Because you can, if your business is open 20 hours a week and it needs to generate $20,000, it needs to make $1,000 an hour. Did I get that right? 20 hours a week? Yeah. And it needs to, no, not a week. It needs to make $20,000 a week. Don't make me do math today. Okay, so then there's your value pay. Your value pay. Your value pay is what you're paying yourself. Your value pay is what your salary. So let me just reiterate that oftentimes small business owners get into business and they think they get what's left. There's another book out there I recommend besides my own, which talks about this too, is Pay Yourself First. So paying yourself first is a motivator. Put yourself in the budget, not getting leftover scraps. That's first. So how do you calculate your personal value pay? Just to reiterate what I said, you can go out and find out what you could make if you were working for someone else doing the same job. That's one way of doing it. And another way of doing it is looking at your minimum budget, what you need to make, and then adding what you want to make so that you can do the fun stuff. That's another way of calculating your value pay. Now, if you're doing online work, one of the tips that I would give you is to track your time. I have what's called the Damn Time Tracker, and I can give you a link to the Damn Time Tracker so that you could go ahead and grab that if you want. And it would track your time, know how you're using your time. And when I'm working with clients, I use T-Sheets. That's part of QuickBooks. And T-Sheets helps me keep track. So I have it as an app on my phone. When I start working with client A, I hit start and I track my time for how many hours I put in, because all of us in this field of service know that time can get away from you. So how do you price yourself in the midst of all of that? You price yourself based on value, not by hour, is how I'd wrap that in a bow. What's the value of your service back to your client? That's your value price. What's the value of you to your business? That's your value pay.
Nick is confused by the difference between gross margin and value pay.
Well, your gross margin is very simply, I apologize that it's confusing. It's your gross profit margin is the number, is the amount of money left after you paid for producing your service. So if you're doing online work, like you're doing social media online, you very well might not have any cost of goods sold. That bottom line could be zero. That you don't have to pay anything for the service you provide. So what I would recommend, I'd like to just share this with you. One of the ways I can individually help you figure this out, which it might be the best way, is I offer a free 30-minute coaching call to, and these aren't discovery calls. I'm not going to get on there and tell you all about the great things I do. My expectation is you're going to get on the phone with me with a problem. And in 30 minutes, we're going to come up with if not a solution, a beginning solution of how you can master that problem. Now, keep in mind, the problem can't be like world peace, but it can be. I would offer that to you, and I can grab that link here as we move to the end of the presentation.
No further questions?
Are we good? I'm going to be hanging around. I'd love to meet you guys. This is a fabulous group. I really appreciate you hanging out. And if I can tell you anything, I know that trying to grasp all of this, if this is brand new to you, is confusing. I know it is. But the one message that I want to give you that I think is more important than anything is you are worth a lot. You are probably worth more than you even imagined. And to value yourself is your first step. To say that what you do, literally, back to that, doing work online, building an app. How does that app change people's lives? Doing social media. If you can help boost a business from 0 to something, you have changed somebody's life. So you are valuable. So price yourself accordingly and then act accordingly from there. That's where all of this starts, is believing in yourself, knowing who you are and putting value in it, and valuing yourself enough to put yourself first.
Kim, a couple of questions. Would you please say the name of the time tracking app again?
I am going to go ahead and put that in the chat right now.
Great. And another question from Richard. When it comes to pricing, how do you charge for your innovation you bring to an industry?
How do you charge for innovation? Oof.
Yeah. When it comes to pricing, how do you charge for your innovation you bring to an industry? If that isn't clear, Richard, would you
Yeah, explain that just a little bit more to me.
Richard, please.
There you go. What I mean by that is, it seems to me when you're unique and you're bringing value to an industry that's totally different. I'll use an example is, my philosophy is that it says that profit minus expenses equal, or pardon me, sales minus expenses equal your gross profit, which I say is BS, because technically is, if you're saying pay yourself first, the first part about it should be good sales, which means is the first dilemma, just sales is not good. But the second part about it is you should pay yourself first, which should be the profits minus profit equals your expenses. And then you get down to the level of how you eliminate things that are not essential to your business as an overhead. And what I'm saying, the innovation is changing the rules in your industry so that you win, rather than playing by the rules that they have and lose. And that's just an example. I'm using a formula that in accounting, I say the formula is wrong, and I believe that basically is again, what you focus on is what you get. And of course, if you don't have sales, you don't have a business. Second part is, if you don't get paid for it, then basically eventually you're going to be owing somebody and have debt, which is not a good thing either. So you're out of business, period. And you have all these expenses to pay back.
Right. Charging for innovation, I mean, that it simply is just the value you bring. I don't want to sound braggadocious, but there's a whole lot of business coaches that'll have you sit down and do business coaching with them, and they'll talk all day long about mindset. And that's great. That's important. That's super important. But the value, the higher value that I bring to the coaching world of business coaching is 30 years of finance and financial management, as well as a focus on that, as well as the ability to help people rethink the way they're doing business and do their business by the numbers. So I think you just simply, it becomes part of that value price that you put on your business. There's no specific way of doing it. If you've created something innovative, you need to be marketing it. You need to put it out there and let people know exactly what it means to them and their business.
Correct, because my concept is instead of, as I said before about the Frankenstein effect, I'm saying is it becomes a legacy. When you're dead and gone, it continues on the business because it has that kind of value, and it will exist to eternity as long as you keep evolving and staying ahead of the standards of the regular industry and what others are offering.
Mm-hmm. Right.
And then you're giving back to the world. And what, like you say, that's the abundance portion of it, like Andrew Carnegie or whoever Mongols were back then, as well as currently.
Thanks, Richard. Kim, can you make some concluding remarks, please?
I'm done. No. I really appreciate all of you. Thank you for the kind words. And you know, in conclusion, I mean, I seriously, I am for tonight. This is I think as much as we can shove into people's brains. I put my link to the free 30-minute coaching call. I would be absolutely so honored to jump in and talk to any one of you for 30 minutes about your business. If it's something that I can assist you with, a direction that I can help take you, great. If not, I just geek out. I gig out on the whole idea of helping entrepreneurs achieve their dream. And more than that, I really truly believe in this value pay. I really truly believe that we need to get paid our value and that we can build businesses that do that. And I'll accept nothing less. My middle son is a speed demon. All right. He's a fabulous engineer. His work lands up on the racetrack all the time. But when he was growing up, I'm just like, I don't know if anybody else has had a child like this, but he drove me crazy. And one day he came to me and he said, "Mom, I'll settle down, but I won't settle." And I can tell you to this day that all three of my kids own their own companies, and he has never settled for less than what he is worth or what he is capable of. And I think if you put anything on your wall, you're worth it. Don't settle. So those would be my closing remarks, and keep a good sense of humor about all of it.
Kim, thank you. On behalf of EIN, we very much appreciate you taking a very difficult subject and really nailing down its basics.
Well, I'm happy to do it. So thank you all.